Welcome back to Explain the Charts, your ultimate guide to decoding complex market movements and transforming data into actionable insights. Today, August 7th, 2025, we're zeroing in on the dynamic US dollar to Canadian dollar currency pair, a crucial barometer for the economic interplay between the United States and Canada. The current fundamental landscape for USDCAD is particularly fascinating, presenting a compelling mosaic of conflicting signals that are undeniably influencing trader sentiment and creating a complex trading environment. On one side, we've seen a consistent stream of dovish comments from Federal Reserve officials, coupled with recent, weaker-than-expected U.S. jobs data, collectively fueling speculation for more aggressive U.S. interest rate cuts. This narrative is powerfully reinforced by reports from investing.com, which indicate widespread market expectations for further rate reductions and, more strikingly, UBS's analytical projection for USDCAD to experience a significant decline towards the 1.34 to 1.35 range in the latter half of 2025. Such macroeconomic developments typically exert downward pressure on the US dollar, thereby generally favoring a depreciation in the USDCAD pair. Even a mere rumor of a high-profile political meeting, like the suggested Trump-Putin summit, has contributed to this broad US dollar weakness. However, presenting a strong counterpoint, recent data from Trading Economics explicitly shows US dollar to Canadian dollar defying this bearish fundamental backdrop, having actually risen by 0.17% today, indicating an immediate, short-term upward momentum for the pair. Furthermore, over the past month, the Canadian dollar has consistently weakened by 0.68% against the US dollar, according to Trading Economics, clearly suggesting a prevailing upward bias for USDCAD that contradicts the broader weak USD theme. Adding to this intriguing divergence, Action Forex unequivocally asserts that a robust US dollar to Canadian dollar rally is actively underway, with a distinct technical target of 1.4014 now firmly on their radar. This sharp, almost paradoxical, contrast between prevailing expectations of US dollar weakness and the actual, observed short-term gains creates a highly complex, yet potentially rewarding, environment for astute traders seeking opportunities. It highlights the critical importance of marrying fundamental analysis with clear price action signals, which is precisely what we'll do in today's deep dive. So, let's begin by unraveling these layers, starting with the macroeconomic picture. Let's transition now to the daily chart, providing us with a macro perspective of USDCAD's price evolution spanning from early 2024 right up to mid-2025. For the majority of this extensive period, the pair has largely moved within a well-defined ascending channel, unmistakably signaling a persistent, albeit volatile, long-term appreciation of the US dollar against its Canadian counterpart. However, during this extensive review, it's absolutely crucial to acknowledge several highly unusual and dramatic single-day plunges, particularly those observed in October and November 2024. And again in January 2025. These events saw prices briefly touching exceptionally low levels, such as 1.26 or even an extreme low of 1.09. Based on typical market behavior and available news, these sharp, often low-volume, declines are most likely data anomalies or brief flash crashes. We'll largely set these outliers aside for our core technical analysis, as they do not represent sustainable market trends or typical trading opportunities. Focusing on the more consistent and interpretable price action, a formidable support base has clearly materialized around the significant 1.35 psychological level. This level has repeatedly demonstrated its resilience, effectively preventing deeper bearish incursions and solidifying its role as a robust demand zone. Conversely, significant overhead resistance has been consistently encountered, first around the notable 1.40 mark and on several occasions, at even higher levels near 1.44 to 1.45. These resistance zones have acted as firm ceilings, consistently capping upward movements and frequently triggering bearish reversals, confirming the supply-side pressure at these higher valuations. The overall ascending trend witnessed for much of 2024, as reflected in our chart, aligns with the 30-day WISE data indicating CAD weakening against the USD, reinforcing the observed USDCAD strength. This macro trend analysis is foundational for comprehending the inherent bullish bias that characterized much of the previous year's trading activity for this currency pair. Now, let's narrow our focus to the more immediate price action, specifically honing in on the period from early 2025 up to our current position on August 7th to identify any emerging short to medium-term trends. Following the peak levels observed in late 2024 and early 2025, the USDCAD pair has visibly transitioned into a distinct phase of consolidation, exhibiting a slight downward correctional bias. This recent price behavior, marked by a sequence of mild lower highs and lower lows, subtly suggests that the robust bullish momentum witnessed earlier has somewhat diminished, at least for the time being. The pair has largely been confined within a tighter 1.37 to 1.38 range over the past several weeks, with yesterday's daily closing price settling at approximately 1.3739, perfectly aligning with the latest immediate news reports. This ongoing consolidation phase vividly illustrates the intense tug-of-war between persistent buying and selling pressures, with neither side currently able to establish a dominant directional impetus. The 1.3750 level, prominently mentioned across various news outlets, now serves as an immediate and crucial resistance point. A sustained and convincing breach above this level would represent a significant bullish signal. Such a breakout could potentially negate the recent correctional moves and signal a resumption of the broader upward trend. Conversely, if the price persistently struggles and ultimately fails to maintain itself above the 1.37 mark, it could trigger an accelerated decline towards the critical long-term support zone at 1.35, thereby confirming the bearish outlook articulated by analysts like UBS. Transaction volumes during this recent consolidation period have remained notably active, often exceeding 100,000 transactions daily, suggesting that considerable market interest persists at these specific price levels. Shifting our analytical lens to the 1-hour chart, it is important to preface this by noting that our most granular historical data for this particular time frame extends only up to July 23, 2025. Despite this slight temporal gap to our current date of August 7, 2025, this segment of data still provides invaluable insights into the characteristic short-term market behavior and the intraday volatility patterns inherent to the USDCAD pair. Throughout the observed period from July 21 to July 23, the USDCAD pair predominantly displayed a somewhat choppy, yet discernible, bearish trajectory, with prices broadly oscillating between the 1.373 and 1.36 levels. We can identify clear minor intraday resistance at approximately 1.372 to 1.373 and corresponding support near 1.367, indicating the prevalence of rather tight intraday trading ranges during that time. The frequent occurrence of both bullish and bearish hourly candles in rapid succession within this period strongly suggests a marked absence of strong directional conviction from major market participants in late July, a classic hallmark of market consolidation preceding a more significant move. Volume on the hourly chart, while naturally fluctuating, consistently exhibited noticeable surges precisely around the pivotal moments of intraday price turns, clearly hinting at robust liquidity and significant trading interest coinciding with these micro-reversals. This observed short-term bearish sentiment in late July for USDCAD appears to align quite well with the broader narrative of underlying US dollar weakness stemming from recent Federal Reserve commentary. Now, for the absolute most immediate and granular perspective on USDCAD's behavior, let's intensely scrutinize the 15-minute chart, specifically focusing on the last few trading days, extending right up to August 6th's daily closing price. This ultra-short time frame vividly illustrates a remarkably narrow trading band, with the pair predominantly confined to oscillations between 1.376 and 1.379, undeniably reflecting a highly tight, range-bound market structure. On August 4th, The price largely clustered around 1.377, displaying modest intraday fluctuations and a palpable sense of indecision, indicative of a delicate equilibrium between immediate supply and demand forces. Early on August 5th, we observed a discernible, albeit fleeting, attempt by bulls to push prices higher towards the 1.379 mark and briefly touching 1.38. However, this upward impetus conspicuously lacked any significant follow-through, leading to quick retracement. Subsequently, a gradual and consistent bearish drift unfolded throughout August 5th and extended into August 6th, culminating in yesterday's closing price around 1.3739, further bolstering the narrative of underlying US dollar weakness in the very short term, despite some news reporting an overall rise today. Crucially, the transaction volume on these shorter 15-minute candles tends to be relatively lower, particularly during non-peak trading hours, suggesting that major institutional participants may be adopting a cautious stance, patiently awaiting clearer macroeconomic catalysts. Nevertheless, brief, intermittent spikes in volume, often coinciding with sharp intraday swings around the 1.377 pivot point, undeniably indicate localized trading interest and the presence of potential scalping opportunities for agile short-term traders. The current price point is undeniably at a critical juncture, directly testing the immediate support levels established over these most recent few days, which will be paramount for determining the early direction of today's opening session. Traders active in this time frame should particularly watch for any sustained breaks of either the 1.376 support or 1.379 resistance, as these could signal a shift in intraday momentum. To synthesize all our observations, let's now provide a comprehensive summary of the critical price levels and potential directional scenarios for USDCAD as of August 7, 2025. Looking at potential upward movements, the primary resistance levels that demand close monitoring are the immediate 1.378 to 1.379 zone, followed by a more substantial technical hurdle at 1.385. And critically, the major psychological and long-standing technical resistance point around 1.40. Conversely, for downward movements, meticulous attention should be directed towards the immediate support at 1.373, a decisive break of which could realistically lead to a retest of the midterm support at 1.365, and ultimately, the pivotal long-term support foundation at 1.35. The compelling argument for a bullish outlook rests firmly on the broader, long-term ascending channel observed on the daily chart and the explicit forecast from Action Forex predicting an ongoing rally with a target of 1.4014. If USDCAD achieves a convincing daily close above 1.3750 and subsequently breaches the 1.385 level with strong, confirming volume, a sustained upward move towards 1.40 becomes highly probable, warranting a likelihood of approximately 65 to 70% under such conditions. A primary catalyst for this bullish resurgence would undoubtedly be any nuanced shift in the Federal Reserve stance, moving towards a less dovish or even hawkish tone, or the release of unexpectedly robust U.S. economic data, particularly the eagerly anticipated next set of employment figures. On the flip side, the bearish case is significantly fortified by the continuing dovish Fed commentary, the recent weak U.S. jobs reports, and particularly by UBS's well-publicized prediction of a decline to 1.34 to 1.35 in the latter half of 2025. A sustained break and daily close below 1.373 would confidently signal a likely retest of the 1.365 support, approximately 60% likelihood, and if that critical level also fails, the pathway to the 1.35 support opens up with a tangible 55% likelihood in the short to medium term. The upcoming Canadian jobs report, which has been explicitly highlighted in market news as a key focus, represents a significant scheduled event that possesses the potential to serve as the definitive directional catalyst the market is currently anticipating. Beyond scheduled economic releases, astute traders should also vigilantly monitor any further pronouncements from both the Federal Reserve and the Bank of Canada, as these central bank communications are paramount drivers for this currency pair. Furthermore, Broader geopolitical developments, such as the hinted Trump-Putin meeting, could swiftly influence global risk sentiment and subsequently impact cross-currency flows for USDCAD. Crucially, always seek confirmation on higher volume when observing price action breaking significant support or resistance levels. A strong, large-bodied candlestick closing decisively above or below such levels, especially on the daily chart, is a powerful and reliable signal. Finally, in this environment of mixed signals and potential volatility, it is paramount to employ robust risk management strategies, as the market is clearly poised for sharp, two-way price action, making calculated risk-reward ratios essential for successful trading.